Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is March 28th, 2025, and we're diving into Clearside Biomedical's latest earnings report for the fourth quarter and full year of 2024. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Clearside Biomedical is a biopharmaceutical company focused on innovative drug delivery to the back of the eye, and they've just released their financial results along with some exciting corporate updates.
Revenue and profitability overview. Let's start with the financials. Clearside reported a significant drop in revenue for the fourth quarter of 2024, down to $0.3 million from $6.3 million in the same quarter last year. John, what contributed to this decline?
The decrease in revenue is primarily due to the absence of license fees and milestone payments that were received in the fourth quarter of 2023. This highlights the variability in Clearside's revenue streams, which are heavily reliant on partnerships and licensing agreements.
And what about their profitability?
Clearside reported a net loss of $7.3 million for the quarter, compared to a $4.8 million loss in the previous year. This increase in net loss is largely due to the reduced revenue from licensing and milestone payments.
Operational efficiencies and future outlook. Despite the financial challenges, Clearside has managed to reduce its R&D expenses. Can you tell us more about this, John?
Yes, R&D expenses decreased to $4.2 million from $6.3 million, primarily due to lower clinical trial costs following the completion of the Odyssey Phase 2b trial. This indicates Clearside's focus on operational efficiencies as they transition to the next phase of their clinical programs.
And what are their plans for the future, particularly with their lead program, CLSAX?
Clearside is moving forward with Phase 3 plans for CLSAX in wet AMD, following a successful end-of-Phase 2 meeting with the FDA. This program is designed to maximize commercial potential and is a key part of their strategy to expand their pipeline and market presence.
Strategic partnerships and pipeline expansion. Clearside has been active in forming strategic partnerships. What are some of the recent developments in this area?
Clearside's Asia-Pacific partner, Arctic Vision, had its NDA for Arcadis accepted for review in China, and they also signed a new commercial collaboration with Santen Pharmaceutical for rights in China. These partnerships are crucial for Clearside's expansion into international markets.
And how does this fit into their overall pipeline strategy?
These collaborations, along with their ongoing clinical trials, position Clearside to expand their pipeline into new therapeutic areas such as diabetic retinopathy and geographic atrophy. This diversification is key to their long-term growth strategy.
EPS forecast and analyst expectations. Let's talk about the earnings per share. Analysts were forecasting an EPS of $9.13, but Clearside reported an actual EPS of $0.09. How significant is this beat?
This is a positive surprise for Clearside, as they managed to beat the forecast by 0.3 cents. It reflects better than expected cost management and operational efficiencies, which is encouraging for investors looking at Clearside's financial health.
Key takeaways. In summary, Clearside Biomedical has faced some revenue challenges, but has shown resilience through strategic partnerships and operational efficiencies. Their ability to beat EPS expectations is a positive sign for investors. John, any final thoughts?
Clearside's focus on expanding their pipeline and forming strategic partnerships is promising. While there are challenges ahead, their innovative approach to drug delivery and strong cash position provide a solid foundation for future growth.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Clearside's performance in the comments below.